right now, if you are operating a business in Saudi Arabia
Right.
and your invoicing software takes longer than exactly 10 minutes to cryptographically stamp a transaction, you could face catastrophic fines.
Oh, or even total business suspension.
Right. Total suspension. You could have, the best product in the world, the most dedicated team, but a 10-minute delay in a server handshake can just bring everything to a grinding halt.
It's a phenomenal amount of pressure.
It really is. That is the reality of operating in today's hyper-complex business environment.
Especially for small and medium enterprises.
Yeah.
I mean, you are effectively expected to have the agility of a startup,
Mm.
but the compliance and data infrastructure of a massive global corporation.
Yeah, which is insane.
It is.
Yeah.
And for a long time, that gap in operational visibility and regulatory armor has been, the single biggest hurdle for SMEs trying to scale.
Well, welcome in. Today, we are opening up a comprehensive technical manual and guide for a system called APS Accounting and Stock Control Solutions.
A very interesting piece of tech.
Super interesting. We are looking at how this specific platform is trying to solve that exact mismatch in resources. So the core mission of this deep dive is to explore how APS acts as a technological bridge.
Right.
It takes the centuries-old, rock-solid foundation of double-entry accounting, and it just fuses it with cutting-edge AI-driven architecture.
Which is, frankly, a fascinating evolution of business software.
Ah.
This manual really details how technology is democratizing data.
Yeah.
It's essentially handing enterprise-grade tools to the business owner who might otherwise be trying to manage global supply chain fluctuations with, like, a spreadsheet.
Which is terrifying. And I'm incredibly interested in the system architecture here, the natural language processing, the edge computing, the API layers.
Oh, we're going to get into all of that.
For sure. But I know that before any AI can give you a brilliant, sweeping insight about your business trajectory, the physical reality of your company has to perfectly align with your financial ledger.
Exactly.
And historically, those two things, the warehouse and the bank account, they live in completely siloed systems.
And that separation is the root of so much operational chaos.
Mm.
I mean, traditionally, you have an inventory management protocol tracking pallets of goods in a warehouse,
Right.
and then a totally separate accounting system tracking capital. So trying to reconcile the two usually involves a lot of manual data entry.
Which means mistakes.
Massive mistakes.
Yeah.
It introduces human error, creating a massive blind spot for the business owner.
The analogy that came to mind while reading the source material is that traditional siloed accounting is a lot like trying to run a high-end restaurant kitchen where you only guess your grocery bill by looking at the empty plates coming back into the dishwasher.
Oh, that's good. That captures the lag perfectly.
Right. You are completely blind to the process. You have no idea what was dropped on the floor, what was burned during prep, or what ingredients were actually used. You only measure the aftermath.
Exactly. You're measuring the aftermath rather than managing the active process. And this is where the APS manual introduces the concept of the bill of materials, or the BM. Right? The BMO acts as the foundational bridge. It acts as a living computational recipe for manufacturing.
Okay, let's unpack this a bit. I was looking at the specific example they provided in the manual about manufacturing a wooden chair.
Yeah, a great example.
It doesn't just broadly categorize like wood and nails. It dictates a highly specific ratio. 4 legs, 1 seat, 20 nails, and exactly 50 milliliters of glue.
Yep.
And what struck me is that it even codes in a 2% wastage allowance for that glue. So how does tracking a physical nail or a drop of glue actually translate into a real-time financial safety net?
Well, that level of granularity is computationally essential. It anticipates the physical friction of the manufacturing floor.
Right.
So when a production order is initiated in the software, the APS system doesn't just wait for the chair to be finished to log a cost.
Like the empty plates in the dishwasher?
Exactly. Instead, it instantly calculates the total cost of all those raw materials based on real-time inventory valuation.
Oh, wow.
Yeah, utilizing standard accounting principles like the weighted average cost method.
So it's actively moving that value across the ledger in real time. It shifts the capital from raw materials into a work-in-progress account and then finally into finished goods.
Automatically, every physical movement of a nail or a drop of glue triggers a corresponding automated double-entry financial movement.
That's wild.
But the architecture goes much deeper than just tracking the cost of goods sold. The manual goes into significant detail regarding advanced batch tracking.
Right, I wanted to ask about that.
Yeah, this elevates the system from a financial tool to essentially a forensic quality control mechanism.
The auto part recall scenario in the source really highlighted this for me. If a defect is discovered in a specific component, let's say batch 123 of a braking mechanism.
Right.
The APS system links that physical batch natively to the financial transaction history. So you aren't just looking for where the part went, you are tracing the entire lineage of its creation.
You can trace it back through the supply chain with surgical precision. The system logs the specific operator who was logged into the manufacturing floor that day.
Wait, down to the operator.
Down to the operator. The environmental conditions during production and the exact shipment of raw materials from a specific supplier that fed into that batch.
That's incredible.
It is. And the source notes, this unbroken chain of custody is fully compliant with ISO 9001 and FDA tracking requirements.
It effectively turns what used to be a company-ending product recall crisis into a targeted extraction.
Precisely.
And I have to imagine that this level of continuous synchronization completely changes the accounting cycle itself.
Oh, fundamentally.
Because whenever I talk to financial controllers, they always describe the dreaded year-end close as this, like, 2-week marathon where they just disappear into a windowless room to reconcile a year's worth of those warehouse-to-ledger discrepancies.
Yeah. The year-end close is historically grueling for that exact reason. But because APS maintains this rigid, continuous sync between the physical and the financial.
That gap doesn't exist.
Right, that reconciliation gap doesn't exist. The manual highlights that the entire year-end rollover, the process of moving balance sheet accounts, calculating complex asset depreciation, transferring closing balances to the new fiscal year,
Yeah.
it's all executed in a 90-second automated sequence.
90 seconds.
Literally 90 seconds.
A process that used to require massive amounts of overtime is reduced to the time it takes to brew a cup of coffee.
It fundamentally changes the role of the financial team. It gives them their time back to actually analyze the data and forecast strategy, rather than spending weeks just, compiling historical numbers to satisfy tax authorities.
So once you have that 90-second close and your costs are mapped down to the microscopic drop of glue, you are faced with a new, arguably larger problem.
Which is?
How do you stop market fluctuations from completely eating that perfectly calculated profit margin? Which means we need to look at the automated pricing engine.
Ah, yes. Because knowing your granular costs is merely the baseline. Protecting the margin against global supply chain volatility is what actually dictates survival.
Right. The manual outlines the auto pricing formula, taking the cost and dividing it by the inverse of the target margin percentage.
Correct.
But what I want to dig into is the scale of the computational problem here. Because calculating a 20% margin on a single wooden chair is easy.
Sure.
But what happens when you have a massive catalog of 10,000 different SKUs and global timber prices suddenly spike by 8% on a Tuesday morning?
That is the exact scenario where human intervention fails. I mean, if you rely on a team of managers to manually audit and update pricing across 10,000 SKUs, you will inevitably suffer a massive lag.
Right.
During that lag, you might sell hundreds of units at the old, unadjusted price. Your margin just vanished because the raw material cost outpaced your retail price, and nobody noticed.
But because APS is tied directly into the bill of materials, it sends that timber price spike the moment the new raw inventory is received.
Exactly. It creates a closed computational loop. The system detects the cost increase, updates the weighted average cost of the work-in-progress inventory, and then pushes that updated data into the smart pricing engine.
And then it just adjusts the price.
Instantly. The engine recalculates and adjusts the suggested selling prices across all affected SKUs to ensure your strict margin targets remain intact.
I do want to push back on this a little bit, though.
Okay, go for it.
If we are handing the keys to the pricing strategy over to an algorithm, doesn't that strip away the human art of business strategy?
So.
Well, are we just letting an algorithm run the company? Like,
Yeah.
if timber prices spike and the system just blindly raises my chair prices by 8%, my competitors might eat the loss to maintain market share.
Right.
And suddenly I'm the most expensive option on the market and my sales plummet.
That's a fair point, but it's a crucial distinction to make. The system does not dictate your business strategy. It enforces the parameters you set. It is an alert and execution mechanism. If your strategy is to hold prices and absorb a temporary cost spike to undercut a competitor, you program the system to flag margin compression rather than auto-adjust the price.
Oh, I see.
The system's primary function is ensuring you are never bleeding margin accidentally.
That makes a lot of sense. It removes the element of surprise. And the manual transitions from that real-time margin protection directly into predictive cash flow analytics.
Yes.
We are moving from looking at current pricing to forecasting future liquidity.
Most SMEs operate by looking exclusively in the rearview mirror. They receive a quarterly statement that tells them what happened 3 months prior.
Right, completely reactive.
Exactly. APS flips that model by analyzing historical transaction data, seasonal purchasing trends, and the specific payment behaviors of your client base.
The client payment behavior aspect is fascinating to me. If the system observes that a massive anchor client routinely pays their invoices 45 days late, and it crosses that data with the knowledge that you have a major seasonal raw material procurement coming up in 30 days.
Connect the temporal dots.
Ah,
The system maps your accounts receivable aging against your upcoming procurement schedules.
wow.
And it can project a cash shortfall before the capital ever dries up.
Yeah.
That kind of forward-looking liquidity map is traditionally reserved for massive corporations that have entire departments dedicated to financial modeling.
And APS just automates the foresight.
Completely.
Predictive data and smart pricing are undeniably powerful. But here's where it gets really interesting, because here is the reality of software adoption. It is entirely useless if the business owner cannot easily extract that insight.
So true.
If I have to write a complex SQL database query joining 5 different tables just to ask my system a basic question about profitability, I'm simply going to stop asking questions.
Right. The barrier to entry for data analysis becomes a massive bottleneck.
Mm,
Complexity is the enemy of utilization.
exactly.
If the data isn't accessible to the decision maker in the moment they need it, the value of that data degrades instantly.
Which brings us to the AI engine, specifically the natural language processing, or NLP, built into APS. This completely sidesteps the need for coding.
It's a game changer.
I was reading the example query in the manual where a manager just types, I think it was, show me the best-selling products by profitability in the Riyadh branch last month.
Yep.
The mechanics behind how the system handles that plain English or Arabic, since it's fully bilingual, are incredible.
The mechanism is what we call entity extraction.
Mm.
The AI isn't just doing a rudimentary keyword search. It actually understands the relational database schema underlying the software.
So it parses Riyadh not just as a word, but as a specific location entity tied to a branch ID.
Correct. It identifies the location entity, it recognizes profitability as a calculated financial metric derived from the cost and revenue tables, and it translates last month into a dynamic, specific date range.
That is so cool.
It instantly translates that conversational sentence into a complex SQL join command in the background, pulls the data, and renders a visual report instantly on the dashboard.
It democratizes the business intelligence. You don't need a data scientist sitting next to you to build a pivot table. You just ask the system a question like you would a colleague.
Exactly.
But the AI isn't purely reactive, right? It isn't just sitting idle waiting for a human prompt. The manual details a layer of proactive anomaly detection.
Right. The AI continuously monitors the background data flow to establish a statistical baseline of what normal operations look like for your specific business.
So if a manager in a specific branch starts issuing unusual discounts, or if there is an uncharacteristic sudden spike in operating expenses on a specific product line,
The system triggers an alert based on statistical deviation.
proactively.
Proactively. If a product line's gross margin drops by 4% outside of expected seasonal variance, the business owner is notified immediately.
Wow.
It allows an SME to catch pricing errors, rogue spending, or even potential fraud in its infancy, rather than discovering it during a quarterly audit when the damage is already done.
That real-time edge monitoring ties directly into the progressive web app functionality, right? The
Yeah.
PWA.
Yes, the PWA is crucial.
The manual emphasizes that business doesn't just happen at a desk in the main office. The PWA allows field managers to interact with the core system on their mobile devices, even in offline environments.
Extending the architecture to the edge of the business is critical for capturing accurate data.
And the standout feature for me there is the OCR, the optical character recognition.
Oh, the OCR is fantastic.
The manual describes a scenario where an employee is traveling, they pay for a taxi or a client dinner, and they simply snap a photo of the receipt using the PWA.
Right.
The AI reads the image, extracts the vendor name, the total amount, the date, and the tax paid.
But it goes a step further than basic data extraction.
Yeah.
By utilizing context clues and historical vendor patterns, the AI automatically codes that specific transaction to the correct general ledger account.
Unbelievable.
It knows a taxi receipt from Dubai belongs in a specific travel expense ledger. It brings the transaction directly into the central financial nervous system with near zero Human friction.
It completely eliminates the dreaded shoebox full of crumpled receipts at the end of the month.
Thankfully.
But all of this operational efficiency, the OCR, the automated pricing, the anomaly detection, it hits a massive brick wall when it comes to international borders.
Oh, absolutely.
Because no matter how brilliant your pricing strategy is, a single regulatory misstep in today's highly complex tax environments can result in catastrophic fines.
The compliance landscape is notoriously unforgiving, particularly in the Middle East, which the APS manual focuses on extensively.
Right.
Governments are aggressively digitizing their tax collection mechanisms, and the technical burdens placed on businesses are immense.
When I was reading the section on the APS compliance shield, the metaphor that felt most accurate wasn't like a lawyer looking over your shoulder. It felt more like a universal power adapter for data.
That's a great way to look at it.
You plug the business into the system, and no matter what chaotic, highly specific regulatory socket you plug into across different countries, the system automatically converts your invoice data into the exact voltage and format required by that specific government.
That is a highly accurate way to visualize the architecture. It is an intelligent, dynamic API switchboard.
Okay, so what does this all mean for a business trying to cross borders?
Well, the manual contrasts two very specific regulatory environments to illustrate this. Let's look at the ETA system in Egypt versus the ZATCA system in Saudi Arabia.
Okay, the ETA system requires direct API synchronization, right?
Yes. The Egyptian Tax Authority mandates that the moment your business generates an invoice, your system must execute an instantaneous secure handshake with the government servers to log the transaction.
So a real-time data pipeline.
It's exactly. But Saudi Arabia's ZATCA Phase 2 rollout operates on a completely different mechanical premise.
Completely different. ZATCA requires a highly complex process called cryptographic stamping.
Right. When you generate an invoice, the system has to generate a unique cryptographic hash, a digital fingerprint, essentially, that locks the invoice data so it cannot be tampered with post-generation.
And the technical hurdle is that you have exactly a 10-minute window to complete this process and clear it with the authority.
Exactly, which brings us back to the hook we started with. If your server lags, or if your software doesn't know how to generate that specific hash,
The invoice is legally invalid.
and you face suspension. An SME trying to scale across both Egypt and Saudi Arabia has to somehow navigate these dual, highly technical protocols simultaneously.
And this is where the APS compliance shield takes over.
Exactly. The user experience remains identical. The salesperson just clicks Generate Invoice.
Then the system does the rest.
The system's architecture detects the jurisdiction, routes the data through the correct protocol, executing the instant API sync for Cairo, or applying the cryptographic hash within the 10-minute window for Riyadh, entirely in the background.
It absorbs the regulatory complexity,
Completely.
but the rules of the game are constantly changing, right?
Yeah.
Tax authorities do not just set a system and walk away. They update formats and change tax brackets constantly.
Which is why static compliance isn't enough. The manual details how APS utilizes proactive legislative tracking. The platform monitors for shifts in regulatory mandates before they legally go into effect.
Give us an idea of what that looks like in practice. Like, let's say a government announces that starting next fiscal year, the standard value-added tax is going to be split.
Okay.
Some essential goods will drop to a 5% tier, while luxury goods jump to a 15% tier.
For a company managing thousands of SKUs, manually reassigning tax categories is a nightmare.
Oh, total nightmare.
But the APS system parses that upcoming legislative change and alerts the system administrators weeks in advance. It recommends the necessary adjustments to the item master data and the tax brackets.
And there's a scoring system too, right?
Yes, it even generates a literal percentage-based compliance score on the administrative dashboard to ensure the business is audit ready.
A metric that shows exactly how prepared you are.
Exactly. It tracks changes to things like the wage protection system as well, the WPS across the Gulf.
Right.
If the required file format for uploading employee payroll data changes from a standard CSV to a highly specific XML structure, the system updates the export templates automatically.
It creates a buffer between the SME and regulatory disaster.
It really does.
When you zoom out and look at the entire scope of what we've unpacked today, it really paints a clear picture. We started by discussing the massive disparity between a growing SME armed with spreadsheets and a global corporation armed with data centers.
Technology is aggressively compressing that gap.
By syncing the physical warehouse to the financial ledger down to the precise milliliter of glue, using that baseline to automate margin protection against global supply shocks, allowing a manager to interrogate their data using natural language, and wrapping the entire operation in a self-updating regulatory shield.
It's a lot.
It's huge. A platform like APS is effectively granting a small business the operational transparency and predictive power of a Fortune 500 company.
Because it removes the friction of administration.
Hmm.
Knowledge and data are only valuable when they are understood and actively applied to strategy.
Right.
This architecture ensures the data is applied automatically, allowing the business owner to focus on actual market growth rather than administrative survival.
It is a fundamental shift in how businesses operate. And as we close out this deep dive, there is a section at the very end of the technical manual that looked past the current horizon, focusing on future trends.
Ah, yes.
It introduced the concept of green accounting and the circular economy, which I found fascinating.
It is a critical development in global business infrastructure. If you think about the exact mechanisms we discussed today regarding the bill of materials.
Right, how the system tracks 4 legs, 1 seat, 20 nails, and 50 milliliters of glue to calculate the precise financial cost of a chair.
Exactly. The manual outlines a future where that exact same BOM architecture is expanded to track environmental cost alongside financial cost.
Tracking the physical environment with the exact same double entry rigor we use for capital.
Imagine an upcoming update where the system doesn't just pull the cost of the wood, it pulls the exact carbon footprint of the specific delivery truck that transported it,
Wow.
the kilowatt hours of energy consumed by the factory machines that cut it, and the precise percentage of recycled materials utilized in that single unit of production.
So the system isn't just calculating a financial profit margin to satisfy your investors, it is calculating an environmental profit margin to satisfy regulatory bodies.
Exactly. It raises a massive, fast-approaching question for anyone listening who operates a business today.
Yeah.
If the technology already exists to perfectly sync your physical reality to your financial reality in real time, what happens to your operational strategy when your company's environmental ledger is scrutinized, tracked, and audited just as rigorously by governments and global consumers as your bank accounts are today?
It forces you to rethink everything. You won't just be facing a financial audit from the tax authority, you will be facing a comprehensive Earth audit.
An Earth audit, that's exactly it.
Something for you to really mull over as you plan your long-term strategy. Because ready or not, that level of granular molecular tracking isn't just a hypothetical future. The computational foundation is already being built into the servers today.
It's already here.
Well, that wraps up our deep dive for today. Keep tracking those margins, and we will catch you next time.